Hello, everyone. Welcome to the Capital Intelligence Channel. Today, we're diving straight into a massive multi-trillion dollar investment ecosystem that's built entirely around, well, fear. It's the fear economy. As serious investors, it's absolutely crucial that we understand exactly where capital flows when the markets get, let's say, a little nervous. So we've put together this comprehensive explainer for you. We're going to follow the money all the way from these massive macro-level trends right down into the highly tactical micro-level trades. The Global Risks 2025 report recently warned of a world of growing divisions. And honestly, that hit the nail right on the head. That's our core thesis today. See, global uncertainty, it's not just a societal or political issue anymore. It's morphed into a highly financialized market force, and it's driving completely unprecedented capital flows. Think about it. When divisions grow, the demand for security, hedging, and protection just absolutely skyrockets. And in the world of high-level finance, well, demand always creates an architectural response. So here's our roadmap for this explainer. We'll start with the global ETF boom, touch on cybersecurity, the surveillance market, and private military security, before wrapping up with the tactical plays and trading the fear economy and navigating volatility. Kicking things off with Section 1, the global ETF boom, the macro foundation. To really understand where the smart money is moving during uncertain times, we've got to look at the broader market plumbing first. You just can't grasp the micro trades without seeing this macro picture. At the end of September 2025, global ETF assets hit a staggering record high. We are talking $18.81 trillion. According to ETFGI research, the industry pulled in over $267 billion in net inflows in just one single month. In a world that feels incredibly risky, investors are rushing toward the liquidity, the transparency, and the diversification that exchange-traded funds provide. And get this, PwC is forecasting this booming architecture to nearly double. They're projecting $35 trillion by 2030. Now, why does this matter for the anxiety economy? Because this massive ocean-sized liquidity pool lets investors use highly specialized funds to target very specific themes, like global security. This isn't just passive money sitting around. It's heavily driven by disruptive innovation and very active alternative strategies. Moving right along to Section 2. Investing in cybersecurity, our digital shield. Let's zoom in on the specific sectors capturing all this capital. We've got to start with our digital borders, right? Because data is literally the most critical infrastructure in the modern economy. The threats out there are getting so sophisticated, and it's turning these security subsectors into prime investment targets. We're seeing major capital flowing straight into AI-driven security solutions and zero-trust architectures. Plus, with hybrid warfare totally blurring the lines between digital and physical threats, businesses are forced to invest heavily just to keep up with strict data regulations like GDPR. For a serious investor, the firms offering these end-to-end solutions are becoming absolute foundational portfolio elements. Which brings us to Section 3, the surveillance market surge, focusing on physical protection. You see, the anxiety economy doesn't just stop at digital firewalls. It spills right over into the physical world, protecting tangible assets, supply chains, and actual borders. Driven by this deep need for systemic risk management, the Homeland Security surveillance camera market is just exploding. We're tracking a massive 9.1% compound annual growth rate here. They're projecting it'll hit $41.8 billion by 2030. And we aren't talking about your old-school CCTV cameras anymore. This capital is funding next-gen AI-powered analytics, predictive threat assessments, remote monitoring, the whole shebang. It is quite literally the financialization of physical safety. Next up, Section 4, private military security growth, essentially the outsourcing of defense. Scaling up from corporate surveillance, we are seeing immense capital inflows into the outsourcing of defense itself. With geopolitical tensions staying so elevated globally, traditional military forces are increasingly being supplemented by private enterprise. The private military security services market is booming. Valuations are forecasted to jump from $274 billion today to over $451 billion in the next decade. Governments and massive multinational corporations are heavily outsourcing their logistics, base operations, and convoy protections to private firms. Why? Simply because it cuts costs and cuts straight through bureaucratic red tape. What's really fascinating here from an investment perspective is how these firms are operating across different domains. They're increasingly offering these highly integrated dual land maritime contracts. So they're protecting everything from inland infrastructure and personnel in high-risk zones all the way out to offshore energy and global shipping lanes to guard against piracy. It's a massive, highly specialized revenue stream designed to protect complex global supply chains from start to finish.
All right, on to Section 5, Trading the Fear Economy, the tactical play.
Now, let's zoom all the way in to the micro level. We've talked about investing in the companies providing the security, but how do sophisticated investors actually tactically trade the concept of uncertainty itself? Well, it all starts with the VIX index. Often called the market's fear gauge, the VIX measures the market's expectations for near-term volatility, and it's calculated right from S&P 500 options prices. When fear and uncertainty spike, the VIX spikes. This is the core underlying metric that lets global anxiety be heavily financialized and traded almost like a stock. But here's the catch. You can't actually buy the VIX index directly. So Wall Street did what Wall Street does. They created a whole suite of complex exchange-traded products. Investors use instruments like VIX short-term futures ETFs, think tickers like VIXY, or the leveraged UVXY, to hedge their portfolios against sudden market shocks, or, let's be honest, just to speculate. There are also products like SVLT designed to play volatility dynamics specifically in the tech sector. These are highly advanced, tactical tools meant for the active investor. Finally, Section 6, Navigating Volatility and Risk. Now listen to me carefully on this one. I really cannot stress this enough. Trading market fear comes with significant structural hazards. These are not your standard set-it-and-forget-it index funds. They require immense caution and deep market understanding. If you're going to trade volatility, you absolutely must understand contango. Because volatility ETFs hold futures contracts rather than actual stocks, they have to constantly sell expiring contracts and buy new ones further out in time. When the market is calm, those future contracts cost more than the expiring ones. That pricing structure, that's contango. Basically, you're paying a constant premium just to hold your place in line. It's a hidden mechanism that silently but persistently destroys capital in long-term volatility trades. Here is exactly how the trap snaps shut on an uninformed investor. Imagine someone buys a VIX ETF, thinking, hey, this is a great long-term hedge. But as the fund does its daily rebalancing, contango forces it to constantly sell low and buy high. It creates this continuous negative roll yield. The result? Substantial value just erodes away. Even if the VIX stays completely flat, the ETF is going to slowly bleed out value over time. This breakdown is exactly why high-risk instruments like UVXY are designed purely for tactical, short-term plays. Definitely not for buy and hold investing. So at the end of the day, we have to ask ourselves a pretty tough question. As global divisions keep growing, as that ETF market scales toward $35 trillion, and as capital continues to flood into physical defense and financial volatility instruments, the landscape is shifting under our feet. Understanding this fear economy, from the big macro investments in cybersecurity and private defense down to the micro mechanics of contango, is no longer optional for the serious investor. Are you positioned correctly? Think about it. Thank you so much for joining me on this explainer today. Keep learning, stay focused out there, and I'll see you next time.